If you've been trading and investing for a while in the stock markets, or even just a few months, you probably always ask yourself the question, is there something that we can spot before a correction or a crash occurs in the markets? In today's video, we'll be trying to answer some of the things that we look for, along with our technical analysis levels for the S&P 500, Nasdaq, Bitcoin, Tesla, gold, silver, and more. There's so much going on in the markets right now. We're obviously in the middle of earnings in the US, and things are possibly just getting heated up, especially with this US 10 year coming down so much. Stay tuned to find out more. It's going to be a good one, guys. Okay, one of the best places for us to start any market update is to always discuss what happened at the close. And this will be a quick recap of the close ending 2nd of August 2021. The financials were down because the 10-year dropped off. We had Tesla moving up above 700, very substantial move there. AMD was also pretty hot, and a few other stocks, including the big merger, of course, of Square purchasing out an Australian stock here, and I'm Australian, Afterpay. We'll be discussing that throughout the video. Let's move over now to the indices and just discuss these sectors and indices and how they traded. So the IWM, the Russell 2000, heavily financial index, this one, it did start off hot, and then the 10-year started to drop off. It broke underneath our support we discussed in the weekend video, and it led to a decline in the IWM. This is a very important chart. We'll be looking at that very soon. We also had declines across the board in the SPX, the Nasdaq, and the Dow Jones. So all markets were finding a little bit of weakness there after the fake market futures came in very green in the morning. Remember, they were all up about 0.5%, 0.6%, and by the close, very different. And this is why we call them fake market futures. You always want to know what Wall Street's doing, not what the futures market is doing. Let's have a look now at some of our favorite sectors within the markets, and you'll notice utilities again was on top. So was semiconductors, which, tends to have a pretty good time at this point in the year. And XLU, the utilities being on top, that's usually the defensive sector. And when it's outperforming the market over a shorter period of time, again, it can be one of those things that leads to a bit of a correction in the markets. Now, we've discussed every single day, almost over the last 2 weeks, what's going on in August and September. We know that we've got problems here. We know that September is the weakest month of the year. We know that August is relatively weak. I've detailed to you guys several times over what's happening there. We also know that it's more in the Nasdaq than anything else. The Nasdaq tends to be the weakest over the August-September period, and that's what we're really looking for here in the markets. We're looking for signs of weakness because we've had really a great run for the last 6 months. I mean, yes, there's been ups and downs, and you might disagree with me, but yeah, I think overall the market is still up quite healthily and looking really great. I like the 2 steps forward, 1 step back markets, guys. When you get that, you know that you can be in for a multi-year bull. If it just goes off into the sun, which is what most people want, where it just goes in a vertical line like this, unfortunately, it usually leads to a big boom and a huge bust up. Let's move over to the earnings. Now, of course, Square, I love Square from a company perspective and, of course, the fintech industry in general. You guys know that I've been talking about Square. I've obviously owned Square. I love Square from that aspect. They did purchase Afterpay, which is an Australian pay or buy now, pay later style company. It's an obvious fit for their business. They paid 39 billion Australian dollars for it. Look, I mean, from the perspective of my rant yesterday, did Square overpay? Yes, they did. I did this rant during the live stream, by the way. They overpaid. There's no doubt. The problem is they're behind. So if they don't do it now, they can't create the software. And I think that's why they had to pay such a good price or such a heavy price for it. In the day and age of very low yields and, of course, very low borrowing costs, Square may get away with this move. Of course, the stock market did like it with the earnings. It came through pretty strong. I feel like if Square had had the foresight to automatically create this years ago, they would have done better. But if the market likes acquisitions, and that's what the market likes, it's not just acquisitions, it's also getting new customers, and they always look at the number. They don't really look at debt anymore. This could actually work out in Square's pricing favor. For me, I guess it's probably I will reduce a little bit here on Square, and I will look for a cheaper price later on. I still like the business. I just think that, unfortunately, they overpaid, and it annoys me that they were forced into a position when they had to do this to compete with PayPal and compete with others. Let's hope it works out, though, and Square continues to smash it. Because I was at the market on the weekend. You guys probably don't care about this, but I tell you what, 95% of vendors in the market, they were using Square. So it's happening. Activision Blizzard coming out after the close on Tuesday. That will be an interesting one. We've also got Skills, a beaten down stock recently. Got Alibaba on the open. A lot of you guys are looking at Baba. I've seen calls opened all over the place on this one. So good luck for you guys with the short ones there. We've got Roku. We've got Etsy. These will be interesting considering how they've performed after the Amazon news, especially Etsy. And then we've got Uber, Fastly, DraftKings on Friday. There's still some big earnings here, and one of my favorites, Cloudflare. You guys know I love that stock. That stock's been really amazing. I mean, it was $60 only a few months ago, and now it's well over 100. I mean, it's just an amazing story how good cybersecurity has been. Let's get into the technical analysis though straight away here and talk about what's going on with the dollar index. So firstly, I want to start with the dollar index, and I just want to let you know that this is on support. We know this. But is there bullish signs or is there bearish signs right now? There really isn't anything. I would say it's at a neutral level. If it closes underneath the 91.80, then of course we're looking more to the bear side. If it closed above 92.20, then we're looking at the bull side. Sometimes you need to know when a market is consolidating and when a market is trading. And right now, I think the dollar index is consolidating down in these lows, trying to figure out its next directional move, whether it's going to be risk on, and the market, of course, may force dollar index down, or whether it's going to be risk off and people move back to the US dollar as a safety net. One of the things that's also getting hit up by this is gold. So if we go down to a 2-hour gold chart, what you'll notice is that we're at a really key pivotal point here where gold's trying its best to hold up. Look at this. Around this 1810 level, there's a lot of role reversal. Previous resistances becoming support. Now, I like the 8-hour chart. You guys know I like 8 hours, 4 hours on gold. So I'm looking for more bullish signs here from this chart. Have we seen enough just yet? Well, the 4-hour didn't quite close above this wick. It closed above all the other bodies, but not above the wick. I'm looking for this to get above again. Let's go down to the 1-hour as well. Just have a quick look at this. Imagine if this turned into a little head and shoulders. If you had, it's not very good, but if it did, I would love to see this level broken up and through. So we'll have to keep watching this one. Gold, it's all about this 1810. It needs to hold this level and it needs to start moving up. I would love to see it do it. We'll see whether it can rally. Silver's another one that we're watching. This is probably the better chart actually right now. It's like a massive flag. Now we want it to basically break out in the next couple of hours, if not day or 24-hour, 48-hour period. It needs to close above this zone. Now, if it doesn't, it hasn't activated the flag pattern and we can't use it. Again, 8 hours is one of the time frames I'm using here. You'll notice it had quite a few great rejections. We had rejection wick, rejection wick, rejection wick. And this is always what I tell you guys on the channel. If there's no momentum follow through, you just can't do anything about it, guys. No momentum follow through, it's a false signal. And it's your job as a trader and investor to try to be able to cut out, I guess, the mistakes and cut out the false signals. And one of the ways you can do that is by waiting that little bit extra so that you get the momentum through. We talk about it in our course. It's all about I'll give you a hint. It's all about breaking things down to percentages. Percentages are key here when it comes to figuring out when to be in one and when not to be in one. So flag is still in play as an option. It has not, of course, closed above yet. So we'll be looking for a 25.60 plus breakout for silver. Hasn't happened at this stage. And if it does, 26.40 seems like 26.40 to 26.50 seems the logical conclusion there. All right, let's move over now to some of the things going on in the markets. And I want to just quickly bring up hype equity straight away here. And the reason I want to bring this up is because look at these stocks that are getting hyped by the retail community. Wowzers. I haven't seen this kind of hype coming through here in the big stocks for quite some time. We've got Tesla, AMD. We know that AMD got pushed heavily by retail traders. Even Wall Street didn't bother stuffing around with that one too much last week. Tesla's now social volume change out of control once it got past $700. And then we've also got, of course, Square that got pushed heavily yesterday. So I'm wondering whether Wall Street was really buying Square or whether it was a lot of retailers getting hyped into buying the news. Because you know what? Every single metric that I had alerts going off everywhere about Square's social volume change after that announcement. Every single chart was just going crazy. And of course, now we're seeing that in Tesla. So look, good news. Congratulations, Tesla guys. You got it above $700. That is fantastic information from the perspective of the channel and the range that we're in. Now, you usually take this distance, You extrapolate that out, and that extrapolation leads straight into that 770, 780 zone. This was previous support, which became resistance. It makes sense for Tesla to try to get here. Now, as long as the market holds up, I mean, this stock can maybe do its own thing, and that's very possible. This is a big bullish sign here for Tesla. You can see volume's been up recently. Few days of bigger trade here, 1, 2, 3 bigger trade days after the earnings report, and it has gotten through $700. This is technically the trigger that should start further bullish momentum on Tesla. It's just the way it really looks. I mean, no matter how you really splice it, that's the way you've got to look at it. Let's go to the 2-hour chart here, and you'll notice it did pull back a little bit. We could see it pull back straight to 700, maybe 690, and then find some buying pressure. And somewhere around 690 to 700 should be where conservative buyers start to pick up Tesla again. From a day trader perspective, you would expect that to be the area where buyers do get more committed to the trade. Usually you want to go into the smaller time frames, look for little lightning bolts, etc., etc. But yeah, Tesla through 700. Now it hopefully moves to the next zone. All right, let's discuss the indices. And this is where the interesting stuff's going on in the markets right now. So firstly, let me give you a reading here for the US10 year. In fact, I'll switch over to it. So the US10 year dumped. It got underneath that 122. It was doing this early in the market session. And I did say this to the private community. I said, wow, that US10 year is getting obliterated. I can't believe the banks aren't moving down. And guess what? The banks started moving down after the fact. In fact, it was lagging. I couldn't believe how much it was lagging. What a great opportunity for day traders to exploit there. So yes, US 10 year, very susceptible to the banks. We've got a 1% interest rate on the 10 year being kind of like an interesting level where you would think the support resistance becomes too much for it. It starts bouncing off. Michael Burry will not be happy with his inflation-based trade at this stage. Maybe he's too early, who knows? But I've said on many occasions that I don't think monetary policy is necessarily as inflationary as people think. Look to Japan to try to get a little bit of an inkling on how monetary policy works. Plus, just think about the last decade. It's not like it's a new thing in the US economy. There are reasons, and we'll discuss that at another point. So US 10 year can cause some problems in the market. For it to come down like this, it's saying that the market's not inflationary at this point. It's saying that there's something wrong with this the kind of economy, really. For the US 10 year to be 1.18, that's not great. If it gets down to 1, am I worried for the US economy? Yeah, I'm not feeling it too much. And a lot of crashes or corrections, more in this case corrections, start with the financials. They start with a little bit of a crack there or something that's concerning. So we have 1 resistance breakdown, 2 resistance breakdown, 3 resistance breakdown now on IWM, and it had a little bit of follow through here on the close. So IWM, which is the Russell 2000, this has a lot of financial companies in it. The 10 years going down, financial companies suffer because their margins get, of course, squeezed due to that. And this is the kind of technical where you start to think, okay, we're in the middle of the range. I think this is coming back down, or it's going to try to start to find some weakness here and possibly move into the 209, 208 area. This is exactly what you would expect from this type of price action. Now, it's also got the 20 and the 50 behind it, which are 2 very key moving averages. They act as dynamic resistance. So IWM is looking very weak. Then we move over to JP Morgan. We've talked about the head and shoulders so many times here. Left shoulder, head, right shoulder. That was a nice rejection on this, almost got underneath. So if this flows through again, we're starting to see that kind of pattern towards weakness in the financials. And if it gets underneath the neckline here, what does that pose? It poses a big sell-off in the financials, maybe not all the way down because it's hard, of course, to sell off as much as it is to buy. The market's always an optimistic kind of thing. It always goes more up than it goes down. And yeah, I mean, this could be the beginning of the cracks in the market. This is the chart that I'm looking at along with IWM, the Russell 2000. They're the key ones that we're watching. Let's move over though to the SPX, because the S&P 500, the real market anyway, it isn't breaking higher. It had a chance to do so. The futures were super close to this high over here. And then throughout the day, it just kind of started lagging due to the financials coming down. We've got 43.70 or 72 in this case, but 70 being a key level of support. If we breach underneath this, what have we done? We've created a short-term time frame little double top. That double top will lead to further selling, which you would think would probably push into 4,300. And then at that point, we're starting to put some downward pressure on the markets. And we're starting to talk about, well, is there actually a bear case scenario here? I mean, remember, if it breaks through this 4370, what is it most likely not going to do? If it breaks through and closes below, it's going to get through the 20 exponential on the daily and go towards the 50. Now, the 50 has been every single time we have looked to buy the dip over the last couple of pullbacks. We've talked about this. We've been very, very correct. So underneath this zone is going to be super critical to see how the market reacts, because this could begin the beginning of some weakness here. And then we move over to something like the QQQ, so the Nasdaq, and we start talking about that one. And again, is there strength here in this market? We've talked about 352 being the key level. 352 is the key level here where the bears fully get control of the market. So from a day trader, shorter term time frame, the S&P 500, that little level there might start a little bit of a sell-off in the algorithms. But from a bigger bear correction standpoint, something like this 352 makes a lot of sense. You get underneath here in the QQQ, you're pushing underneath the 50 exponential on the daily. That will be similar to the S&P. But then it also makes a lot of sense because when you go out to the weekly, there's one thing that we haven't done in a very long time now in the Nasdaq, and that is that we haven't pulled back to a 50 exponential moving average. Now, we generally like to pull back to those types of ones during more semi-correction periods. Like over the years, the S&P and the Nasdaq, specifically the Nasdaq, likes to come back to the 50s. Now, I'll tell you right now, there are so many puts sitting on 325. 325 QQQ is the level where there's a lot of puts. So if there's a lot of puts there, and that's kind of where the market could correct to, this is what we're talking about in terms of the worst case, or probably worst case technical scenario where it comes back down to the 325. So these are all theoreticals. I'm not trying to scare anyone. I don't believe that there is a big mega crash coming from multiple years here. I've said that quite a few times. Even though so many things are flashing, they're always flashing. But this is the hypothesis that you start to put together. Is 352 critical here? Yes. Is the next level going to be like a 340? Yes. You can see resistance becomes support. Then after that, you would be looking at this 325 zone and thinking, is there puts there? There certainly is. So it's putting together the pieces of the puzzle and knowing the triggers that send us there. And banks are certainly one of those. And of course, Nasdaq is traditionally weak over the August, September months. So am I seeing bullishness right now? We're still in an uptrend. Nothing's changed. We haven't broken above. Nothing's changed. But for day traders out there, you've got some key levels to be looking at and bringing together with your own analysis. Even the Dow, look at the Dow futures here. In a very tight trading range, we have an amazing longer term trend line when you put it out to the daily. And this range, if we break underneath here in the session over the next couple of days, then we start to put pressure back on this trend line. We break through the trend line, that's weakness in the market. So if you go to a daily, you will see this trend line is very, very good and it's been working for us for a long time, but it's starting to weaken. There's no real higher peaks here. There's just equal peaks. So you break underneath, things aren't looking so great in the market, are they? Let's move over to cryptocurrencies and just quickly talk about Ethereum. So Ethereum moved from our 24 to 26. Congratulations for everyone that took that. That was great. We're still putting pressure on the 26 level. If we make above the 26 on something like the daily, we should move to the 28, possibly even a little bit higher, like a 28.50. That would be awesome to see. But I think the biggest story is probably Bitcoin. It hit the 42.5. We talked about this on the weekend. That's the key resistance. We have always known this. So the longer now it does this pattern here, the better it will be. In fact, the longer it sits there and does nothing, the better it will be. We did discuss it on our Twitters. And if you go over here to profile and you have a quick look at the FX Evolution Twitters, we discussed this kind of level. This is where we want it to create the SOS of a Wyckoff accumulation. So right here, and I think this has been pretty accurate. We did see that move. We saw it go back down to 36.3. It moved up, started consolidating, moved to 42.5, which is right here. And now it's consolidating again. It looks just like Wyckoff. It's beautiful. So if you want to follow us on the Twitters. Of course, if you want to view us live, we are 1 hour before the New York Open every trading day of the week. That's Monday to Friday. And I'll tell you what, guys, thank you so much for the support recently. Good luck out there. keep looking at those banks. They're going to be one of the ones that I'm watching. IWM, the banks indeed are very, very important. And for anyone that's in Square, congratulations in actually getting it to get through on an acquisition day. The stock went up 10%. That's awesome. Hey, I cannot complain. You guys know I love the Squares. However, I am still a little bit annoyed that it had to come down to a $40 billion acquisition to get it through. What can you do though? When your competition is beating you at this stage, you've got to get the acquisitions done. Speak to you soon, guys. Bye for now.